Good day, you're watching Businessworld Live. I'm Danie, Laurel.
And I'm Delos Santos. Here are the biggest stories today. The Bangko Sentral is now open to a more aggressive rate hike to prevent the peso from falling further and to curb soaring inflation.
The business community bears their wish list for President Ferdinand Marcos Jr. now that he has been officially sworn into office.
Now, despite a weakening peso, Finance Chief Diokno says the Marcos administration will continue borrowing from foreign sources.
And bank lending grows to a two-year high in May. That's as economic activity continued to recover. We begin our broadcast with the Bangko Sentral now open to a more hawkish stance after imposing gradual tightening during its previous meetings.
BSP Governor Felipe Medalla says the central bank may consider a more aggressive rate hike in August on the back of quickening inflation and the continuous depreciation of the peso. Medalla says if the exchange rate is overshooting too much and that selling foreign exchange will not make the problem go away, the BSP may consider increasing policy rates by more than 25 basis points. Medalla says the BSP will also keep a close eye on inflation, although he expects consumer spending to boost economic growth in the second quarter. Finance Chief Diokno, predecessor of Governor Medalla, forecasts inflation to have accelerated to 5.7 to 6.5% in June due to higher oil, electricity, and food prices, as well as a weaker peso.
Now recall that inflation soared to 5.4% in May. That's the fastest in more than 3 years. Data for June inflation will be released on July 5th, while the Bangko Sentral will hold its next policy meeting on August 18. The BSP raised interest rates by 25 basis points to 2.5% for a second straight meeting last month to cool inflation.
Ferdinand Marcos Jr. was finally sworn into the presidency yesterday. Mobile journalist Julie Baiza gives us a recap of what went on during his inauguration.
Si Ferdinand Romualdez Marcos Jr. ay taimtim na nanunumpa bilang Pangulo ng Pilipinas.
It is now official. Ferdinand Marcos Jr. is the country's 17th president after taking his oath at the National Museum on Thursday. Marcos Jr. was accompanied by his wife, Attorney Liza Araneta Marcos, and their three sons, Sandro, Vincent, and Simon. The inaugural ceremony began with the singing of the national anthem. Aming ligaya na followed by an ecumenical prayer. There was also a 30-minute military civic parade. Also joining the parade were members of different sectors like OFWs, medical frontliners, laborers, fishermen, and farmers.
Of the Republic of the Philippines.
Shortly after the reading of the joint resolution of Congress, at exactly 12 noon, Marcos Jr. was sworn in by Supreme Court Chief Justice Alexander Gismundo. In his more or less 25-minute inaugural address, Marcos Jr. echoed his campaign call for unity.
At pinakinggan ko ang tinig ninyo na ang sinisigaw ay pagkakaisa, pagkakaisa, pagkakaisa.
Marcos Jr. also believed that by focusing on the work that has to be done, the country will go very far under his watch.
Government will get as much done alone without requiring more from you. That is what government and public officials are for. No excuses, just deliver.
He then said that they're currently drawing up a comprehensive plan for economic transformation. This would focus on food sufficiency, education sector, energy supply, continuation of infrastructure programs, and the public health system. Marcos Jr. even highlighted his late father's accomplishment, but said that Filipinos should focus on the future instead.
I am here not to talk about the past. I am here to tell you about our future. A future of sufficiency.
Lastly, Marcos Jr. shared his hope and dreams with the Filipino people.
Ang pangarap nyo ay pangarap ko. At sa pangarap na maging mas masinan ang kinabukasan natin at ng ating mga anak, ang pangarap nyo ay pangarap ko.
Mobile journalist Julie Baiza, We Are One News.
Today.
Today is the start of the real work for the new administration. How should they get the ball rolling for the first 100 days? Let's get the perspective of the private sector with George Barcelon, President of the Philippine Chamber of Commerce and Industry. Sir George, good morning. Thank you for joining us. Sir George, I think you are on mute. If you can just unmute for a bit here, sir.
I've done,
All right, good. There you go.
Yes, good morning.
Good morning, sir.
Again, your thoughts on the speech here, the inauguration speech of President Marcos Jr. Was the business community satisfied, or were you left wanting for more?
Well, I think the speech was uplifting in the sense that he plainly stated that he owes his mandate to the voters. And now he carries on his shoulder the responsibility of making the dreams of 110 Filipinos come true. Okay? And he stated emphatically that the buck ends with him. And he has sole responsibility, no excuses regarding shortcomings or failure, as he stated. So that is a very, what they call a powerful statement coming from the new president. And other aspect that he did mention was our OFW's welfare and the country's health issue that needs to be addressed. Education is also one, and in foremost top of his mind, I think, because he's now the acting secretary of agriculture. So agriculture, power, energy must be made, as he stated, must be made available and sufficient for the well-being of the citizens and the country's economic health. He's coming from the fact that he knows that there are challenges ahead, and he needs to leverage whatever successes laid by his predecessor. And the statement, I think one of the key words he mentioned was about trust. And I take it that he will use his good political sense, to trust what is good for the country. One can sense his sincerity. We just hope that he will be able to imbue the same commitment to his team in the next 6 years.
Okay.
Sir, you already mentioned that he wants to build on the progress made by the former administration. Particularly, he mentioned infrastructure. He said, he wants to not start again. He doesn't want credit for it. He just wants to complete what was already started. Sir, is the business community happy or satisfied with a plan like this? Just continuity, business as usual, or do we need more specific change? And if so, what are you left wanting for?
Well, definitely the infrastructure, the build of the previous administration must be continued, because maraming project in the pipeline, they're not yet completely done. No? Plus others infrastructure that is really needs to be fast-tracked. Our connectivity is one, meaning broadband, wherein it should be made available and affordable in the far-flung areas. I think that is the equalizer, no? When you think of the millions of Filipinos, marginal Filipinos who voted for him to be the president. And at least I think that can be done in the shortest time. We have the new DICT secretary, and he did mention that this will be given priority. Other aspect that we were hoping to hear, but not too much specific, is how to boost the industrial base.
Okay.
He hardly touched on the foreign direct investments and also job creation, which is very vital for us to rebound after what we've gone through, and also the headwind on the inflation and the debt issue.
Okay. Sir, what about the competitiveness of the Philippines compared to other countries? Did you see this in any way? I mean, personally, I feel like that I didn't really hear about that in the speech. But he did focus on much more fundamental issues, diba? Like you mentioned, agriculture, energy security, food security. A little less compared to other previous administration that's focused on the services industry, for example, or the BPO's remittances. Tell us how you interpret this, sir, and the priorities of the new admin.
Well, I mean, as far as priorities, the area that he mentioned, no, education to be handled. He has full confidence in the Vice President Sara handling education. But what, of course, like any businessman would like, no, is what are the constraints that we have in our country? How come mas maraming mga foreign direct investment pumupunta sa ibang bansa, hindi dito sa atin? Okay? And that's one thing that I sense that, or maybe it should be highlighted, is the ease of doing business in our country. Okay? Of course, that takes into the whole picture, no? Ease of doing business, ibig sabihin, bawasan yung bureaucracy, dapat bawasan din yung corruption. And this is something that, from our point of view, when we talk to investors coming in, top of list, this is one, energy is one, and moving forward, I think the economic team, no? I mean, we'll have to give them some time. They just got on board yesterday, and we have full confidence that he has been able to muster a good economic team, people with track record, and it's for them to, in a way, I mean, the private sector, as some of the statements that I've made, that we're reaching out to the government, and I think the government should likewise reach out. No? These are challenging times, and there is no hard facts to deal with what we're facing. Today, the commuter's fare, no, in transportation fare, tinaasan na. And ang effect of that, no, hindi natin maiwasan because all the fuel prices has gone up. Diesel is 100%, no, and the like. So this is how to balance the clamoring of fair wages and the DTI's role in making prices within reason, affordable, but at the same time, for the businessmen still to survive.
Now, talking about boosting investment confidence here, much of that, of course, hinges as well on how government conducts itself. Now, based from the speech yesterday, we did not hear anything about the fight against corruption, which is normally a staple when you talk about inauguration speeches of the past presidents. Is that worrisome here for the business community? And do you think that the Marcos administration should at least have a clear-cut step or plan when it comes to addressing corruption?
On that point, Jess, as I mentioned, he has a good economic team. No? And as a matter of fact, I've already touched base with some of the incoming secretaries. And we would like to continue our dialogue. We have more visibility on the ground. And we will be sharing, with them some suggestions. But I feel that people who are holding key positions are competent in what they are facing. It's just a question of facing in some of the plans that they would like to put forward. Usually, the first 100 days or more than that, they will be stopping some of the positions, USEC, ASEC, or whatnot. I hope the good ones are maintained. We have sounded off to many of them that the past administration has good crop of USEC and ASEC, and they can be maintained. And even for that matter, the ARTA, the anti-red tape, should continue. No, because they have done a real good job in response to the clamoring of the private sectors as far as bureaucracy is concerned.
Sir, compared to the previous administration, do you envision this administration as one that is more, let's say, liberal in terms of more capital markets friendly, more public partnerships, or will there be more government regulation, especially since there are issues on the table now with food security, inflation, and the government might need to step in to allow, for example, the issue of wage hikes even is a very sensitive topic for the private sector?
Earlier, I mentioned that one of the key words he stated was trust. That he will not, the government will not be there to impede or hinder the private sectors in their business. And I will take his word for it that he should be able to extend that kind of openness, wherein he solicited, as he said, no, he's open to constructive suggestions, and using that as a foundation, definitely he will hear a lot of suggestions, whether it's in line with what they plan to do or maybe not. But at least we get ourselves a forum for him to listen to us.
And then lastly, maybe before we let you go, Sir George, we have yet to hear names of possible appointees as Health Secretary and Energy Secretary, considering that we're still in the middle of a pandemic. At the same time, we're experiencing soaring fuel prices. What does that signify for you? And at the same time, how crucial is it for the new administration to at least pick names, at least in the next few days or so?
Well, it's very crucial, Jess, for us, no? The business sector. Power is one of the important ingredient in the cost. As a matter of fact, only the other day, we had a meeting with the Retail Electricity Suppliers Association. I mean, we gather stakeholders, the Electricity Retailers Association, to sort of have a baseline on what we can share with the new Secretary of Energy. Okay. Everything now is so uncertain. Our product mix on power, which is mostly coal-based and fuel-based, and that has gone up. And whether the players in the power sector has enough in the pipeline, no? Let's say for the next year or so, to maintain a certain power rates that is acceptable for the industry. We know the war in Russia and Ukraine is still ongoing. Oil has hit $110. There have been talks about oil hitting $150 per barrel. And those are really of concern unless the government, the power sector, really projects their requirement and are able to get the fuel source for price stability.
All right, so the business community, of course, waiting on bated breath for the finalization of those very important appointments. Thank you so much, George Barcelon, President of PCCI.
Thank you.
Now, pausing for a quick break, but coming right up after that. A government think tank says forecasts debt to GDP ratio to peak by next year at 66.8%.
More of that and other stories when Businessworld Live returns. Stay with us.
And you're still watching Business World Live here on One News. I'm Jess Delos Santos.
And I'm Danie, Laurel.
Now, the country's debt to GDP ratio is expected to peak next year at 66.8%. And that's according to the Philippine Institute for Development Studies, who said this would still be a manageable debt to GDP level. Still, PIDS said the figure is unlikely to return to pre-pandemic levels in the near term. The institute added that the debt increase resulted from a widening fiscal deficit triggered by a sharp decline in government revenue and a rise in public spending during the pandemic. The projection for 2025 is now at 66.4% debt to GDP ratio.
Now, bank lending growth posted a two-year high in May. Data from the Bangko Sentral showed outstanding loans rose by 10.7% to nearly 10 trillion pesos. This is higher than the 10% increase logged the previous month. It is also the fastest growth in lending seen since the 11% expansion logged in May of 2020. Meanwhile, outstanding loans to residents grew by 10.6% for the month. RCBC Chief Economist Mike Ricafort attributes this pickup to the reopening of the economy and borrowers rushing of finance activities in view of the increase in long-term interest rates.
On the other hand, the country's total savings dropped to almost 3.9 trillion pesos last year as consumers took part in revenge spending. PSA data show that gross savings in 2021 declined by 12.4% from over 4.4 trillion pesos during the height of COVID in 2020. ING senior economist Nikki Mapa said Filipinos appeared to have dipped into their savings to do some revenge spending as the economy reopened.
And this from the Philippine Star, the Marcos administration will keep its doors open to offshore borrowing even in the face of a depreciating peso. Now, according to Finance Secretary Diokno, the government will still depend on local lenders for its financing requirements. But Diokno said the new administration would remain open to borrowing from abroad as long as conditions are favorable. However, economics professors said that the government should think twice about turning overseas for its financing needs. DLSU's Maria Ella Oplas and Ateneo's Leonardo Lanzona said debt repayment will be too costly when the peso is struggling against the US dollar.
And those are the biggest stories on the economic and corporate front today. I'm Jess De Los Santos.
And I'm Danie, Laurel. We are One News. And don't go away. We'll give you the latest on the local bourse when Business World Live returns. Stay with us.
Dan, it looks like that pre-inauguration rally was short-lived. The mounting inflation concerns still got the best of equities yesterday. How are we opening the last trading day of the week?
Barely hanging on there, but exactly as you mentioned, everyone was so focused on PBBM's speech that they may have missed that the BSP warned that headline inflation could have reached an almost 4-year high in June, and also incoming, or actually now sitting BSP Governor Medalla has said that the BSP will not shy from the larger rate increases to prevent a steep peso. Recall that he did mention that he only preferred 25 bips, and now the markets had reacted to that yesterday, selling off a lot of the property shares. That was the one that really led those declines, and you can see property still bleeding down 0.4%. Now, analysts are saying, of course, with higher interest rates, people are not going to be borrowing or buying properties. Financials, however, have swung to a 1% gain. Services as well. The composite was in the green earlier on, literally 2 minutes ago, and now it's again bleeding some more at 6150.70. And of course, the banks, another thing to be looking out for, which we did mention earlier on in the broadcast, is the fact that we did post one of our highest lending growth we've seen, and that may be a bumping up that sector today. Now, another thing moving markets today, Jess, is the PMI. So that is the S&P Global Philippines' manufacturing index for June. That was 53.8. That does signal an expansion, but is slightly lower than the 54.1 that we saw in the month of May. Nevertheless, it's still the 5th consecutive month of expansion in our manufacturing sector. And another thing that, of course, was to be watched out for yesterday, let me just see if I can pull Balay here. That was an IPO that happened right when the speech was also going on yesterday. So at 9:30 a.m. we had the bell ringing of an IPO, which is of course Frutas listed. But take a look at this. I'll take out the 3-day chart for you so you can see it had risen by almost 19% right there just at the open, but catapulted by 7%, closing lower than 7%. And right now it's actually down by 2 9/10% at 68 centavos. The IPO price was 70 centavos, so still a little bit lower than that. Now, this according to First Grade Holdings. Some investors most likely cashed in because of the market uncertainty. And of course, this did come yesterday as the broader index declined.
All right, and that's it for today, July 1, 2022. Join us again Monday next week at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News Live anytime, anywhere. I'm Jess De Los Santos.
And I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.